20 before 9. Let's check in on your money and see what Wall Street's doing to your retirement funds this morning. Yesterday's E-model, not bad. We had some new records again. Dow ended up by the better part of a full percent yesterday, up 267.5 points. NASDAQ up by 98.5. Standard & Poor's up by 27.5. We all set new closing records in all three indexes. Can we keep it going as earnings season starts going? Let's go downtown, find out. To the offices of Statler Financial Services, Phillip Statler on the line. Phillip, good morning. How you doing?
Good morning, Dave. Hey, doing well today. It's Friday. And, hey, yesterday I think we set 3 new records as best I can tell.
Yeah, 3 new closing records. The Dow is up just shy of 29.3 this morning. Standard & Poor's is over 3,300, and the NASDAQ is at 93.57. I always refer to those as nosebleed levels, and that's about the simplest term one can put on it. We're way up there right now, and according to one of my tip sheets, we added 4 $1 trillion market capitalization companies now to this economy. It used to be an exception. It's almost getting to be normal, isn't it?
Well, at least for some of those technology companies. I mean, I think Apple was the first to kind of hit there, and today it looks like maybe Google's there.
Yep, as the stock market continues to go up, that makes their company values just that much bigger. And, you know, like one of the old senators used to say, you know, $1 trillion here, $1 trillion there, eventually it adds up to some real money, right?
Well, that's definitely true. But let's remember, that's just how much higher they are. And so, I mean, that's a good thing if you're invested in them now. But it's just, you know, I look at it as that's that much further they can fall too, Dave.
Yeah, I know. What goes up must come down, and the higher we get, the more worried one gets, even though optimism sounds like it's reigning supreme. Even the bond yields are falling, indicating or are going up, meaning that we're looking at more. The smart money is moving some more money into equities, at least for the short term, right?
Well, I think so. And looking at some of the commodities, gold, silver, precious metals, they're heading up today too. So it's kind of a mixed signal.
Absolutely. Speaking of mixed signals, and I should always say is the caveat to that, when we talk about bond yields indicating whether money's going into equities, those are guys that can turn on a dime and throw billions of dollars around in no time flat. You and I, with our retirement portfolios, we got to plan a little bit better than that, don't we?
Well, definitely true. We need to have a plan in place to be able to weather the ups and downs. And the closer we get to retirement, you know, the less time we have that we can actually weather some of the volatility and the ups and downs and we see in the marketplace. And so that's why I preach pretty hard that, you know, you need to have a plan in place for diversifying, not diversifying the way the industry diversifies into that pretty little pie chart, but diversifying between what is at risk in the market and what is safe. And safe means that it cannot go down below what you put in there. And so that's the first level of diversification I think most people miss out on.
Absolutely. And that's one of the reasons why we sometimes sound like we're negative Nellies when the market's going crazy. We're not. But the difference is a guy that can sit at his desk in New York City, make one phone call and move $1 billion from bonds into stocks in a hurry, and then 25 minutes later when he sees a change, move it back. Even if we've got the best darn broker in the world, we can't move that fast from down here in Sebring, Florida. So a little bit more hedging of one's bets is always a good idea, right?
Absolutely, Dave. That's definitely the things that, especially the closer people get to retirement, they really need to be focused on how much risk they have in their portfolio.
Absolutely. Talking about contrast with equities going up and commodities going up too, we got a real interesting contrast this morning on the government data dump. I noticed from my report that building permits really fell during December by 4%, and I was all prepared for that to be bad news, but you got the housing starts and they went absolutely the opposite way, didn't they?
Yeah, the housing starts were almost 17%, the highest increase in 13 years. So definitely when we come to housing starts, a very good number. And you're right, you look at that versus permits, what's the disconnect between those two? And I think it's, you know, people have to go get a permit way before they start breaking ground to actually build that building or build that house. And so permits are kind of an indicator of what we can expect maybe 3 or 4 months down the road. Sometimes it takes that long to walk through the permitting process before they actually break ground and start construction.
Yeah, so it could be a leading indicator. It also needs to be said, for the sake of balance, too, that December is always a weird month as far as housing, because generally people don't buy each other a house for Christmas. But at the same time, you see a 4% drop in permits, it's got to at the very least make an eyebrow raise, doesn't it?
Well, it does, even though, and the housing starts deal was really a big indicator to me, because it kind of goes along with what I saw yesterday in the increase in mortgage applications. So those two things kind of go hand in hand.
Absolutely. So bottom line is the housing market is not looking like it's got major cracks in it at the moment anyway. Earnings season continues. We got a few more financials. One non-financial company I saw putting out some information this morning, mainly because I used to live out there. Vail Resorts is now a publicly traded company. And evidently a lot of people aren't going to the overpriced ski resorts this year. Their bookings year to date are down by like 7-point-something%. And that's not good news for the vacation travel industry in general, is it?
No, it's really not. And you have to wonder, is it because of a late snow starting, or is it an economic indicator? You know, sometimes it's a weather-related issue, right? There's not enough snow for people to really go out there and enjoy it. Or is it an economic issue? People are, you know, recovering from Christmas. They put too much on their credit cards, and they just can't afford to go.
No, but it's definitely a crack in the armor somewhere. A couple of financials you heard about as we kind of get to the end of the financial sector, right?
Yeah, we did. We have a couple things coming in there. We've got Regions Financial, which is Regions Bank, and they're kind of a regional bank at that. You know, they missed by a penny a share. Revenue was also above. It came in above forecast. Here's where they kind of the disconnect. Their interest income fell by a little over 4%. Yeah, and their total revenue was up about 3%. But so that means they're making it someplace else to make up for that interest deduction or reduction. And when I looked a minute ago, they're still not. They're not trading this morning, or if they are, nobody's really worried about it because they haven't moved a dime. They're still at that $16.65, which is where they closed at yesterday, and they closed up yesterday 2%. So, nothing, no indicators there yet.
All righty. I do see one big move in the financials that reported. State Street Financial reported overnight as well.
They did. I didn't have the actual detail on that, but I know they had a really good quarter and beat significantly. And year over year, they had some really big numbers. I think that they were up about 70 cents a share year over year. So that was a good thing too for them.
Oh yeah, they're booking upward by like 3.5% in pre-market trading. Maybe they got all of Regions' loan business, huh?
Well, that could be. You know, there's some issues there.
Other indications you got?
The only other company I really have is CSX, the railroad. They came in 3 cents ahead of estimates. Revenue was a little bit below what they had forecasted. One of their issues is that they reported a larger than expected drop in freight volume for the current quarter, and they expect another challenging year this year in 2020. So they're trading down about 2.5% this morning.
Were they blaming it on the tariffs and the trade war?
They didn't. They
a scapegoat, huh?
Yeah.
Interesting. Now, CSX has a lot of railroads laid around here, so that's not necessarily good news, just in terms of fixing the intersections, right?
Yeah, that's true too.
I hear you there. Setting the table for the morning, we're looking at record closes on all three of the major indexes yesterday. We were up across the board. 45 minutes before we open, is the optimism continuing, Phillip?
It is, Dave. We've got green ink has continued to rise since I've been researching this morning. And so we've got the Dow up 106 points. We got the S&P 500 up almost 11 points, and we've got the NASDAQ up almost 44 points. So everything is 1/3% or better right now. If we flip over to the commodities, gold and silver are both up also. We've got silver up 0.6, back over $18 an ounce. And then gold's up about 1/3% to $1,556 an ounce. Crude oil's heading back up, Dave, up 0.5 point to $58.81 a barrel.
At least it's staying under 59 for the moment. I can live with that. Overseas markets were green ink all the way across the board. Asia was up by about 0.5% in all of the markets in the Pacific Rim this morning at the close. Europe following suit. They're trading up. British markets are up almost a full percent this morning, so they're recovering from their panic from yesterday. They must have seen Duchess Meghan someplace and felt good about it all. Phillip, somebody needs advice to figure out how to capitalize on the good news and insure against bad news. That takes an advisor with a full perspective. That's you. How do I find you on the phone?
Then give us a call at 863-382-0037. Like I said earlier, having the right diversification between safety and risk is vitally important, especially if you're 5 years out from retirement or you are already retired. Give us a call for our financial X-ray review, 863-382-0037. Catch us online at statlerfinancial.com. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
And every weekday morning here on Light FM, Scotty's going to keep you company next week while I take an undeserved but still overdue vacation. Fair enough?
Fair enough, man. I'll have to work hard next week, huh?
Yeah, you got to earn your keep this time around. Phillip, thank you so much. We'll see you in a week, all right?
All right, have a good vacation.
Appreciate it. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Remember that.
Folks, again, I want to thank you for joining us today. I hope that you have a great weekend. I look forward to speaking to you again on Monday. Take care.